Welcome to the deep dive. Today, we're really zeroing in on something fundamental to building your own home. Something that, honestly, maybe gets less focused than, say, kitchen finishes.
Yeah, happens all the time.
How to finance the land itself.
Exactly. It's easy to jump ahead to the house plans, the construction loans, but getting that piece of ground locked down, that's step one.
Crucial first step.
And understanding the options here, well, it can save you time, stress, definitely money down the line.
Absolutely. So maybe you're out there actively looking at plots, or perhaps, the idea of a custom home is just sort of simmering.
Wherever you are in the process.
This deep dive is for you. Our mission today, it's pretty straightforward. Let's unpack the main ways you can actually finance buying land.
Get a practical grip on each method.
Okay, so where do we start? The most direct way, I suppose.
Right.
Buying it outright.
Buying outright. It's just like, it sounds you pay the full price, usually in cash.
No financing needed from a third party?
Nope. The deal closes, the title comes straight to you, you own it clean and simple.
And the big advantage there, it seems obvious, is total control, right?
Absolutely. No monthly land payments, no interest accruing.
No lender looking over your shoulder at this stage.
You're the owner, full stop, day one.
Plus, there's a potential knock-on benefit later, isn't there, when you go for the construction loan?
Yes, that's a key point. Owning that land free and clear, it builds serious credibility with banks. It shows you've got skin in the game, financial stability, and that land itself, it becomes equity, collateral, basically, for the build.
Okay, that makes a lot of sense. Like you're bringing a significant asset to the table right from the start.
Precisely.
But let's be real. Not everyone has, what, $50,000? Maybe $150,000 just sitting liquid, ready to buy land?
That's the main hurdle for sure. It's a significant amount of cash.
So for folks who don't have that kind of cash lying around, what's the next logical step? Where do they turn?
Well, for most people aiming to build, the more typical route is getting a land loan.
From a traditional bank. Yeah. Or a credit union.
Exactly. A financial institution.
Okay, so land loans. If you go this route, what should you expect? What are the banks looking for?
Well, first off, be prepared for a down payment. It's usually chunkier than for a standard house mortgage.
Right, I've heard that, like 20%.
Yeah.
Maybe more.
Yeah, typically in that 20 to 30% range, sometimes even a bit higher.
Okay.
And of course, they'll do a full credit check. They need to see your credit worthiness.
Standard stuff. Proof of income too, I assume.
Definitely. Proof of income, job stability, the usual financial checkup. And sometimes, interestingly, they might want a rough idea of your plans for the house.
Really? Even at the land loan stage?
Yeah, just to understand the context, the purpose behind buying this specific plot.
Now, something I've heard, sort of anecdotally, is that these land loans, they can sometimes have tougher terms. Higher interest, maybe shorter payback periods. Why is that?
That's a really sharp observation, and it's generally true. From the lender's perspective, think about it. Raw land is inherently riskier than a finished house.
How so?
Well, there's no structure on it yet, generating value or potential rent. Its value can fluctuate more based on zoning, development nearby. It's just less predictable as collateral.
Less of a sure bet for them if things go south.
Exactly. So that higher perceived risk often means they charge a higher interest rate compared to a regular mortgage.
Yep.
And yes, sometimes the loan term might be shorter too, maybe 10 or 15 years instead of 30.
And appraisals, I suppose, might be more conservative as well.
That's another good point. Appraisals on raw land can definitely be tricky and sometimes come in lower than you'd hope. Something to factor into your planning.
Okay, risk explains the tougher terms.
Yeah.
But you mentioned a potential upside, a way to streamline things later, combining it with the construction loan.
Yes, that's a big potential plus, especially if you plan to build fairly soon.
Right.
Many lenders will let you take out the land loan initially, and then when you're ready with plans and permits, they can roll that land loan balance into a bigger construction loan package.
So it becomes one loan for the whole project.
Essentially, yes, during the build phase. And then the really neat part is once the house is finished and gets its certificate of occupancy,
Yes.
that whole construction loan, including the original land debt, can often be refinanced into a single, standard, long-term mortgage, like the one you'd get for buying an existing house.
Okay, that sounds efficient. One final mortgage payment covering everything.
It simplifies things considerably long-term.
All right, so we've got cash purchase, traditional land loans.
Yeah.
But there was a third option you mentioned, sort of less common, owner financing.
Yes. Owner financing, or sometimes people call it seller financing. It's definitely not the first thing most people think of, but it can be a really valuable option in certain situations.
So what is it? How does it work? No bank involved.
Pretty much, instead of going to a bank, you make a deal directly with the person selling the land.
The landowner acts as the lender.
Exactly. They let you pay them for the land over time in installments. Maybe it's someone who owned the land for years, a retiree perhaps, or an investor who doesn't need all the cash up front.
Interesting. Can you give us a simple example? How might that look?
Sure. Let's say a plot of land is selling for $100,000. The owner might say, okay, give me 20% down.
So $20,000.
Right. And you can pay me the remaining $80,000 over, say, 5 years at 6% interest.
And you just make monthly payments directly to that seller.
You got it. You'd have a formal agreement, a promissory note outlining all the terms, payment schedule, interest, what happens if you default, all that legal stuff.
It needs to be properly documented, of course.
Absolutely crucial. Treat it just like a formal loan. Get legal advice to review the documents.
What are the big advantages here? It sounds potentially faster, less bureaucratic.
That's often the case. You bypass a lot of the bank's underwriting hoops, the extensive paperwork.
The red tape?
Exactly. It can be much quicker. And it can be a lifesaver if maybe your credit isn't perfect or your income is harder to document for a traditional lender.
More flexible terms possible.
Potentially, yes. The seller isn't bound by the same rigid rules as a bank. They might be more willing to work with your specific situation.
Now, a key question, though. If you go this route, does it cause problems later when you do need a bank for the construction loan? Do banks look down on owner financing?
That's a great question, and generally the answer is no. This was your pro tip earlier.
Okay, yes.
Most banks and builders understand owner financing. As long as you have clear title or a properly recorded agreement showing your equitable interest, it's seen as a legitimate way to control the land.
So having owner financing doesn't shut the door on getting the construction loan?
Not usually, no. You still own or control the asset, which is what the construction lender primarily cares about regarding the land itself.
That's really good to know. It opens up another avenue, especially if the bank loan route feels blocked.
Definitely broadens the possibilities.
Okay, so we've covered cash, bank loans, owner financing. Let's pull back for a second. Why is sorting out this land financing piece? Why is it so critical? Why is it the linchpin?
Because everything else hinges on it. Until you have secured the land either by owning it outright or having that firm loan or owner financing agreement in place, you're kind of stuck.
You are, but once you have secured it, suddenly a whole cascade of other necessary steps can actually happen. It's the key that unlocks the rest of the process.
Okay, like what? What doors does securing the land actually open?
Well, now you can really dive into the design. You can hire a land surveyor to get precise boundaries. You can get soil tests done, crucial for foundation design.
Right. Can't design foundations without knowing the soil.
Exactly. And you can seriously engage an architect. They need to know the specifics of your land, the topography, the orientation to design the house properly.
So it lets you move from dreaming to actual concrete planning.
Precisely. And all that work, the surveys, the soil reports, the architectural drawings, feeds into creating what we mentioned earlier, the project package for the bank.
Right, the project package. This is what you take to get the construction loan.
Yes. This package demonstrates you're not just kicking tires, you've done your homework.
So what's typically in that package?
Okay, so you'll definitely need proof you control the land, the title, or your financing agreement.
Then, the detailed architectural plans, the blueprints. A comprehensive budget line by line, how much everything is expected to cost.
Okay. Materials, labor, everything.
Everything. And usually a formal estimate or contract from your chosen builder or general contractor.
Wow. Okay. So it's a pretty substantial collection of documents.
It is. But having it all together, it completely changes the conversation with the lender.
How so?
You're no longer just someone saying, I want to build a house someday. You walk in as a prepared, serious client. You've got the land secured, you've got professional plans, you've got costs nailed down, you've got a builder lined up.
You've moved from being a dreamer to being a planner, a ready-to-go client.
Exactly. And that makes the bank much more comfortable. They see a well-managed project with risks identified and addressed. Your odds of getting that construction loan approved go way, way up.
Makes perfect sense. It reduces their perceived risk dramatically.
Yeah.
Okay, so wrapping up this whole discussion on land financing, what's the single biggest takeaway?
The main goal, honestly, no matter how you get there, cash, bank loan, owner financing, is getting that legal title to the land in your name or under your secure control.
That's the prize
That's
there.
the prize. That document, that title, it's the absolute foundation, literally and
You
figuratively.
can't build without it.
You can't. Once you have it, that piece of dirt stops being just land. It
Yeah.
becomes your foundation.
Your starting point.
Your starting point, your leverage for the next stage of financing, your solid ground to build your dream on.
That's a great way to put it. This has been incredibly helpful, really clarifying the options.
Glad we could unpack it.
And for all of you listening, if you've now got your land sorted or you're feeling clearer on how to pursue it, definitely stick around. Our next deep dive, we're tackling the next big hurdle, financing the actual construction, step by step.
Which leads to maybe a final thought for you to chew on right now.
Mm.
Thinking about your own situation, your finances, your timeline, your comfort with different kinds of deals. Which of these paths makes the most sense for you?
The cash road, the bank loan, or maybe exploring owner financing.
It's worth looking at land opportunities now with those different financing lenses on. It might open up possibilities you hadn't considered before.